Bloomberg Audio Studios. Podcasts, radio, news.
We're very pleased, of course, to be here at the 20th anniversary of Citi's China Conference here in Shanghai, and we have none other than the chair and CEO, Jane Fraser. Thanks so much for having us.
Well, we're delighted to have Bloomberg here. Thank you very much for joining our conference.
So what do you hope to get out of this, and when talking to all your guests and your clients, and to understand a little bit more about the China market, which you know very well, but we're coming out of a bruising trade war. We're not even out of it yet, right? Some say it's a truce, not necessarily a lasting peace. What have been your takeaways so far?
I think what's interesting this time at this conference is that it's moved away from a China for China story. And instead, we have had huge interest and a large number of investors and companies coming to China to understand what is happening here, as well as the Chinese companies and investors that are looking much more externally now. Yeah. So that really feels like a sea change here that's pretty exciting.
How do you serve your clients against the backdrop of two governments that are trying to de-risk, if not decouple?
Look, I think the recent truce has brought some much needed and welcome stability here. We're in a position now for both sides that wanted to have a period now where we can move ahead and have a more stable relationship between both of them. It's transactional, but it's in both sides' interests. And we see our client base navigating this well.
Yeah. What's your vision for the China market as it folds into your overall restructuring plan as well? You're now chair and CEO. First time that those two roles have been joined in a couple of decades. Clear mandate to carry out your vision going forward. What does that look like when you did exit your consumer banking business here, like you did in many markets around the world? You also sold your retail wealth management portfolio to HSBC. You got out of an investment bank JV with Orient Securities, I believe, and you have an outstanding license application for your wholly owned JV in securities.
So Citi has been in China for 124 years. We have a landmark building here in Shanghai, and what we have done is focused our strategy and grown. We are following our international clients around the world. We're seeing them with renewed interest and focus in China, as we talked about. And then we're seeing the Chinese companies innovating at pace and also looking at expanding internationally. So we've been growing rapidly here with a more focused strategy. And it is the power of clarity and renewed purpose in the firm.
Now, before this interview started, you really countered what I said is you're pulling back a little bit from China. That's not at all. You're adding headcount. What are your headcount numbers when we get headlines that your IT department, maybe 3,500 jobs are going to be moving elsewhere and this and that? You pulled back from retail 3 or 4 years ago.
Yeah, I think you're getting the story wrong.
Good. That's why you're here.
Citi is on the front foot. Yeah. We are innovating. We are growing. We're helping support our clients. Our clients are both building resiliency and they are reinventing themselves with all the technological changes. That is no different in China than it is in other parts of the world. So no, this is a firm with clarity of purpose, with clarity of direction. We know where we're headed and we're really delivering strong progress. So I'm excited by the upside that we have. I'm excited about the progress we're making. And I see it here on the ground in China. If we move away from some of the just headwinds that we all know about on consumer spending and on the property market, and you look behind that here in China, it's a manufacturing powerhouse. Yeah. What are we seeing? 50% of all robotic companies in the world are here in China. China is writing the next chapter of its economy around advanced manufacturing, around innovation, as well as more Chinese companies expanding internationally. And we're both serving 70% of the Fortune 500 that are here in China, as well as serving the Chinese companies locally, tap into global markets.
So how does that equate to what the deal flow you see? Vis, who's the head of global banking, who we talked to a couple of hours ago, extremely bullish on the amount of deal flows going into 2026.
Yeah.
What kind of cross-border with China do you see?
Look, I think we're seeing new corridors opening up. And the scale of ambitions, not just in China, but in Asia, are higher than we see really in many other parts of the world. So in these new corridors, we're seeing the Middle East connecting with Asia. For the GCC, they were expecting Asia to be its largest trading partner by next year. That's an entirely new set of flows in the last 5 years. Brazil's connection into Asia and into China, again, very robust. They're major partners. So, the world is changing rapidly. It's adding new corridors, it's adding new flows, it's adding new wealth, and scale is the name of the game.
What will be your strategy with wealth management? You got out, as I said, the retail portion of your wealth management was sold to HSBC, but you're going to be onshore here. But you're going to do a lot of it from Hong Kong and Singapore, right?
So Citi is focused internationally, not on retail banking. We are focused on serving clients who have cross-border needs. That is a very vibrant segment of clients. Think of individuals that are driving mid-market companies that are growing internationally. We think of the world's billionaires and wealthy that need access to global markets. And then we obviously think of investors and corporations that are doing so. There's a lot of engine of growth. It's going to be 50% of all of the new high net worth households created in the next 3 years will be created here in Asia. So our focus is on what is the wealth proposition for those, as well as supporting the companies and the engines of growth behind them.
So what kind of hiring is going to be needed in this part of the world? Not necessarily China, but the rest of Asia. At a time when we're also seeing corporate America, as they invest heavily into AI, they've had to pull back on hiring and jobs have been cut?
It's a great question. I think AI is certainly changing a lot of what we're expecting we're going to need in the world going forward. So from Citi's point of view, for example, we see this as an opportunity to really train up our talent. How do we empower our talent to use the AI tools so they can be smarter in front of clients, they can spend more time serving clients and coming up with solutions, as opposed to the more chore elements of being a banker. We don't know how quickly it's going to change, Steve. So there'll be certainly a lot of shift in coding jobs. We've seen that already. Our productivity is up 9% year over year for our coding teams. But there's going to be new jobs created too. None of us quite know yet exactly how the timing will play out. We know there's a lot of change ahead of that, but our approach is we're going to invest in our talent. Our firm is growing, and that should be able to support the needs going forward. You
mentioned the Middle East. I think you just came back from Riyadh. You're co-chair of the U.S. Saudi Business Council, I believe. This also very bullish on India. Magnificent opportunity there.
He's biased.
Might be a little bit biased, maybe. But again, what do you hope to get from those markets as it fits into your restructuring plan and the vision that you just talked about?
No, the growth plans that we have going forward, because we are on the front foot. I cannot stress that enough. And you can see it in our results. So all of our businesses, we're taking share, we're growing very quickly, and our returns are improving. So as we're looking forward, it's growth. Let's take India. Citi is larger in India today. We are the largest foreign firm by revenues in India. When I look at Korea, where I was just at, that's another market where we were the first foreign bank to open the doors in Korea. And we have a very strong position there supporting multinationals and clients. So as I look around the world, it's becoming more focused on diversification. There is also a focus on reinvention. What we are doing is helping provide the strategic advice. We're helping provide the financing and structuring and arranging that. And we're also helping manage the supply chain reconfiguration. We're helping with the hedging in foreign exchange, interest rates, because volatility is a feature. It's not a bug of the system.
Through your restructuring, you had to get rid of the retail side. And are there other areas that you would like to divest? I know.
You have the wrong story. Citi is about growing. We're very clear.
Front foot forward.
We are very clear on our strategy, and we're moving onwards.
I only ask because, again, the Russia situation is a little bit different probably than your overall strategy. We just got word that Vladimir Putin approved the sale to Renaissance Capital of your bank in Russia. Probably something that you've been wanting to do for a while, but it was held back.
We have been winding down, as many companies have been, the franchise in Russia. We were waiting for the final approval to be able to sell. We've got a couple more to go to Renaissance, but it's a tiny business. So it's in the grand scheme of where Citi is, where we're investing, and what we're doing. It will be good to get that done, but it's not critical to the firm's strategy going forward.
Let's talk about the outlook in the United States right now as we head into 2026. We saw the market reaction overnight. Simply, we're seeing that the Fed's equation, the bets for possible easing coming up are now 50-50 or is still below that because of the specter of inflation. What is your outlook for Fed action going into the new year and the specter of inflation rising?
Look, I don't think we're out of the woods yet, and there's a sense that there may be another shoe to drop. It could be in tariffs or in the labor market. It could be in the asset prices that are quite high in the States. But all of that said, we're quite optimistic about 26. The challenge for the Fed right now is with the government shutdown. We all have a dearth of up-to-date data, which we could do with. It's hard to make these calls of exactly what's going on whilst we're waiting for the information. But as we look further out into next year, I think the resiliency of the corporate balance sheets, the strength, companies leaning in to innovation, investing in AI, there is, I think the doomsdayers will be proven wrong.
We're a couple months out now from when we had concerns rise about, I think there was one of Tricolor, the subprime auto lender. There were failures. There was concerns about non-performing loans. What does your balance sheet look like as far as that, and where is your worries lie?
Our balance sheet is pristine, but I think part of that is because it's very heavily investment grade on the corporate side. We're over 80% investment grade globally, and when we look at the consumer side, it's about 86% prime. So we tend to see the most resilient, healthiest parts of the economy on the balance sheet. All of that said, we haven't seen a thing that is concerning us. The consumer in the States is being fiscally responsible. Companies have been building up some more cash, either for a rainy day if it proves necessary, but most of them for investment. And they're acting from a position of strength. We'll keep an eye on the labor market. We'll keep an eye on some of the areas of mid-tier players in private credit and the like. But as far as we're concerned, that second, third order effects, the bank's not seeing anything that we're worried about.
Are you concerned by what some say maybe bubble forming in AI? We talked about the advantages of AI, but how much of a bubble or overheating?
I'm not sure if we're just in with a lot of our tech clients on the West Coast. I don't think anyone was ready to say that it's a full-on AI bubble, but no one is saying that there aren't some real pockets of let's call it the British understatement, frothiness in the market. It's more around the edges. What I found interesting is we can see a lot of the demand for the infrastructure build that's going in AI and the energy for the next couple of years. where you saw some opinions diverge was in the 3 to 5 year period. Could we be in danger of overbuilding? But no one's feeling that for the big investments that are going on at the moment for the next couple of years. So I think on that one, certainly some pockets of frothiness there on the valuations, but the core infrastructure investments are important, and as we're seeing in our own bank, and I think many companies are, we'll start getting some of the productivity benefits coming through. But the scale and the pace of investment is unprecedented, that is for sure.
Jane Fraser, thanks so much.
Thank you.
I hope you don't mind me playing the devil's advocate. I have the story straight now. Thanks.
Good.
Thanks so
Thank
much
you very much
for having us here
Thank
at
you.
your China conference, the 20th anniversary of that conference here in Shanghai.